What is up, everybody? Welcome back to the Russell Journal. My name is Russell, and this is my journal entry for Wednesday, October 19th, 2022. As you can see behind me here, we have a little bit of mixed results as far as the day goes. It was overall a down day, but more or less a nothing burger day as far as the ranges go. There's definitely a shortening of the range in price action today, and really. That really brings me to sort of the topic of discussion. If you look over here, there it is, over here, you can see that our trade from yesterday, I put on last night, this straddle, is red on both sides of the trade. This is fine. We have plenty of stuff. We're going to talk about that later on in the episode. As of right now, as far as our economic data goes, we had Netflix come out. They tripled basically what they thought the earnings estimates were going to be. However, for Netflix, it was still not relatively a good earnings, although they did have subscriber counts go way up. Okay, so as far as like our economic data, we got some stuff from the Beige Book today. We got a few other things as far as economic data goes, but none of it's really super impactful. And as of right now, you've basically got this push-pull going on in the market between earnings and overall economic picture, okay? And then from that, you get some stuff that's driving kind of from the political realm. And this is where like you really get the volatility, right? Certain political people are coming in and they're going to do different things. This is going to affect the economy one way. And other people are staying and other people are going, and certain bills are going to be moving in this one direction and bills are going to be moving in that direction. And so really going to create this like real crazy sort of push-pull. It's going to create, as you'll see in the market as we go to the charts, it's going to create this sort of churn in the market where you're really probably not going too far until after election season's over, until after some of this earnings season's over. There are some benefits and some strategies to trading in the market around earnings. For example, there is the concept of, there are guys who are basically, they will buy a stock just for the dividend, right? And what they're really looking for in the dividend space is, what is their return on the capital they employ, right? If I put a dividend in, if I buy this stock for its dividend, right, how many of those dividends do I have to capture before I actually get my money back, right? And therein, they don't necessarily care that much about the price. They care more about, they're not in it for equity. They're in it for dividends, right? So they'll be looking more to things that are like, how often do they pay a dividend? Have they ever missed a dividend? Is their value of that dividend on the rise? Do they keep raising the amount on that dividend? How likely are they to lower the amount they're willing to pay for that dividend? And they allocate their portfolios as such, right? This is going to create some inflow into the market. This is going to create some buying pressure into the market, okay? So if you think that like the bears are just going to be able to come in and push this market straight down, it's not going to work. They've got, first of all, stocks are the cheapest they've been in 4 years, right? You're sitting on top of a 4-year moving average on top of that 200 week, just above it. So you really can't expect the bulls to not want to buy here, right? They may not really rally or go crazy, but they're also not going to just let it keep falling, right? They're going to step in. You're at, again, the average of the last 4 years. So, and especially if you're managing a massive portfolio, how awesome would it be to basically be able to average in at the 4-year average, hoping that in the next 10 years, you're just going to keep going up, right? Now, if we begin to see those weekly averages start to slope in the downward direction, we have some problems. If we start seeing price close down below those weekly moving averages, we also have some more problems. But for the most part, as of right now, everything's kind of normal garden variety, which brings me to sort of the issue that I want to talk about today. If you're a trader, and something that I as a trader constantly face. And what you'll see is there's lots of traps. And you'll watch lots of videos on lots of channels about different traps, spotting the bull trap, spotting the bear trap, And the one that you never actually hear about is that happens more often than not is when they trap both sides of the market. Okay. And the reason they do this is, and it's really trapping the options traders more than anything. If you're a bear, if you're a bull, if you're trading hardcore stocks, up and down is pretty much, right? A flat market isn't really going to trap you, right? You can always sell out, take profit, or reconfigure your position, right? But when you're an options trader, you take a position and you're stuck there, and it's either going above your strike or below your strike, whichever, and either to your profit or against your profit. And so ultimately, like when you're an options trader, one of the things that happens is the only way you make money is when the price is above your strike, okay? So, or below your strike, depending which way you go. So as an options trader, you really need to see that volatility. You need to see that movement, right? Also, a lot of options are priced based on volatility. So sometimes you can see it as like implied volatility. It'll be if you're in the options chain, you'll look for the letters VOL, or sometimes you'll see it as Vega, I believe, is the Greek symbol for it. So you really will see that happen. And when it stops happening, what they're really after, what's happening, is the market makers really tired of everything pushing around all over the place, right? And they have two things that they really need to do. In order to create this market, they have to balance their number of shares versus the amount of money they have on hand, right? They have two piles. They got their shares over here, they got their money over here, and they try and keep those piles in balance, right? Now, sure, they want to make some money, but overall, that's not where they make their real money. Where the market makers tend to make their real money is selling contracts, selling options, right? And so what the thing is, they sell those contracts, okay? And then what they do is they will keep that market mostly flat. And you'll see it'll have kind of these curves around this one strange pivot. And when you hear technical analysis guys talk about a pivot, now there's two types of pivot. One is a pivot point, which is based on moving average, or about opens and closes, and there's a trading strategy around that. I can recommend Ira Epstein has a trading class about the pivot point and pivot point strategy. I believe it's actually free, so I highly recommend going over, checking out Ira's website, iraepstein.com. Again, not affiliated. I just got to give credit where credit is due. I'm not a stock market guru. This whole thing is about me basically logging my journey as a trader. So when we're talking about this, it is a discussion format though. So I'm not going to come here at you, what the way I present it is not going to be, there's not a question to the way I present. So enough of my insecurity about that. Anyway, so getting back to it is you wind up with this sort of weird, strange pivot. Now, if you're in today's market, you'll see that move, early in the morning was kind of through about 369 price level, and then later on in the day, 367, 368. You'll see the pivot kind of around there. We did get as low. We got into the mid 365s at one point, but it didn't stay down there for very long. Didn't really have any follow through on the bear side. Again, like I said, you can't expect the bulls to not be coming in. You can't expect investors to not be coming in to buy this market up. Okay? So we'll get into all that into the charts. Going into this weekend, again, some of the stuff we want to look at, we're looking for, I believe, Friday. The next real big earnings that will be a market-moving earnings is American Express. How and what consumers are doing in the way of credit, how much credit they're using, how much credit they have left to use, how much of that credit is getting paid back, right? All of that's going to paint some type of picture going forward into the market. So really going to keep an eye on American Express. The other thing that you really want to see is you want to see that people are using credit less and that they're buying less, right? Again, what we're expecting here, the Fed is going to raise those interest rates. Those interest rates, they make things more expensive. The cost of money is more expensive. If I'm going to build something, it's going to be more expensive. And what we want to see is the Fed raising those interest rates to a point where the consumer says, I can't spend anymore. I'm done, right? I can't spend anymore, right? And so they either can't stop or can't buy it, or they won't buy it. And that is where all of a sudden now you have retailers chasing buyers. And in order to chase buyers, what they do, they lower prices, right? So what we're really, really looking for is that. Now, there are a few things in this that are really, really concerning. In the political realm, you have the Biden administration trying to bring down the cost of oil, right? They're releasing oil from the strategic reserves. Okay. Now, on one side, this is bad in the event we get into some sort of military conflict. We need to have that oil for our military. So there's some concern with that. The second thing about this that there's a lot of concern is on the political front is that we need higher prices because we need people to stop spending money. That's the whole point. And so what the government is doing right now is going directly against the Fed by trying to bring down the price of oil artificially. They're trying to artificially inject that supply. Well, that's not an actual supply. That's not coming right out of the ground and into the world, right? That is coming from a reserve, right? It's fake. It's and it's not sustainable. And even worse, the government's going to have to go and buy that oil back at some point. So again, I want people to be able to live, but at the same time, you have to stop fighting your own solution. This is your solution, is to raise prices so that people will stop buying, so that it will lower prices, which I know sounds absolutely nuts. That sounds absolutely insane, but this is how Volcker fought it. And if the more these administrations keep doing this, the more they are dragging out this, and the more painful this recession will probably be. Okay, so anyway, that is kind of, again, that's not even political. There's nothing, to be honest with you, I don't really care about the political side of that, right? That's the truth. This is how they decided to fight inflation, right? They didn't decide to inflate it or to solve it by like inflating the supply. They inflated the money side, right? They're continuing to do that, So anyway, we are going to go ahead and jump into the charts because that's the stuff that you guys are here for and the stuff that mostly matters as far as our trade goes. Okay. So here we are. Okay, so here we are. Basically, you can see where we're at. You are on the SPY. We're going to go ahead and start here because this is what really matters, and then, whatever. Okay, again, you've got this trend in this. Hold on, let me come over this side. Okay, so your trend is in the upward direction. Okay? You're traveling up. You're higher low, higher low, higher low, right? Higher high, higher high. You have not taken out, I'm having trouble here. You have not taken out this low yet, okay? Take out this low, and we've got a different, where is it? Yeah, take out this low, and you've got a different story, okay? That is the way you look at this chart. Your trend is still up, okay? Now, the trend is breaking a little bit. Okay, it is breaking a little bit, but it's not over. Okay, where is this? Right back here. Okay, so you're down. Honestly, let me do it for you. We'll do it. There's your first low. There's your second low. And right in there is your third low. Okay? See those three lows? Violate the top one, and you have no trend. You've invalidated the trend, okay? If you break below that low, your bull trend is over. It doesn't mean a new trend can't start, and it doesn't necessarily mean that a new leg down will begin, right? But what it will tell you is that you're losing the trend, okay? Now, especially because I knew that we were kind of coming into this. Where we're at? We're going over here. We're coming into this. That's why I'm holding this straddle, this straddle right here, right? Is because I don't know which way this trend is going to break. Is it going to break down for your next leg lower? Is it going to do simply a corrective wave and keep going and then go back, continue to go back up? Which one is going to happen? Now, from an economic standpoint, we should be getting ready to make the next leg lower, right? But again, you have earnings season. That means dividends are coming out. That means investors are going to want to buy the dip. They're going to want to get their money working to where maybe those dividends can offset some of their other losses, right? So really where we're expecting to see the next leg lower, as far as this should be, is after earnings season, right? Coming into November is when we should start to see the actual next leg lower. And the reason that is because you're going to start seeing these fund managers cutting their losses and going for their tax loss harvesting. We saw this last year in November, especially towards the end, towards Thanksgiving. We saw a lot of this, and there's nothing to say that we won't. Not to mention, you don't know what your political realm is going to look like. You know, you don't know. You have no clue. So that's really as far as that goes. Okay, so let's go ahead and jump over. That's the SPY. That's our straddle. Okay. Oof, I'm losing my papers. Okay, we're going to come back over here. Not you. Okay, VIX. Okay, going back into the VIX. Trend is still up. Okay? There's also chances our bias is still up. Now, something you should know, we had a red day on SPY and you put in a red candle here. There's chances that if those two things happen, that there's going to be another push in SPY within the next two trading sessions. This is just a pretty common statistic. It's not 100%. I think it's like something like 73% of the time, something like that, that you're going to see a run in SPY. Okay, the other thing that we can notice about here is, okay, so our trend is up, bias is up, but our momentum here, back over here, momentum is coming down, okay? So with momentum coming down, there is a chance to get the break. And just so you know, this line is pretty much right where the 18-day moving average is. I'm not going to put it on here for you guys. And obviously, you're down here at the 18-day average. Your Bollinger Band's up there. So I'm not going to show all of that because I'm pretty well aware of it. This one is the thing that's really, really going to be weird. And this is one other thing that I want to talk about. This is USD. Now, what we have this morning is now the dollar and the bond market, okay? I don't really do the bond market here. It's really mostly boring most of the time and doesn't pay very, very well. But we do kind of keep an eye on it. The 10-year yield hit 4.143% this morning. That is the highest it's been in 14 years, okay? So we're looking at this, again, trend is invalid at this point. This lower high right here, you have this high back over here, and you've got this high right here. So what you have right now is lower highs and higher lows. You have no trend, okay? This is another place where like you may want to straddle because you don't know, is it going to break for a leg lower or is it going to go up, right? Is it going to break for a new trend higher? Now, I will tell you, if those bond yields keep going, look out here. This will go into rocket ship mode, and it will be very, very interesting. The second thing, too, about it is if you are another chartist and you trade patterns, you have left shoulder, head. You could be looking at another right shoulder situation here, before you actually get the next leg lower. Head and shoulders pattern, that'll be one of my episodes at some point, as far as it goes. So the thing is we are seeing some break in the dollar. You're getting a little break in the dollar, which again should bring some relief to the stock market. Really, stocks are under pressure today because of oil, right? Energy took a big hit because Biden's trying to release another 15 million barrels, okay? Again, love him, hate him, doesn't matter. That's the policy, and that makes stocks go down, right? It's really that simple, right? As far as all of that stuff goes. So we'll go back one more time. We'll look at SPY. We'll put on the Bollinger Bands and pick out a few price targets, and then we're going to call it a day here, okay? Okay, so you still got your trend down. You got your trend is coming up. Your momentum is coming up, but you're stalling out right basically at the 18-day moving average here on SPY. I'm trying to get out of the way for you guys, right? And that's really where you're having trouble. So that is pretty much where your trouble is. I just got the warning sign. It's time to mosey on. Okay. Let me see. I gotta go back over here. My producer's gonna have fun editing this. All right, guys. I'd like to thank you for joining me. Really, again, watching it with that straddle. I think we're gonna get a break one way or the other in the next couple days. This thing's got till Monday before it expires, so I probably got to make a decision about it actually tomorrow. So we'll see what happens. In the meantime, thanks for checking us out again. Make sure to hit that like button on the video. Please subscribe to the channel. Could use some subscribers. And how do we run it down? The Russell Journal is written, edited, and hosted by me, your host Russell. We are produced by Social Media Shows. Our executive producer is Pureza. Check out socialmediashows.com. They do a wonderful job. And until tomorrow, I think there's some sort of catchphrase.